Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Strategas President and Head of Portfolio Strategy, Nicholas Bohnsack, to talk all things markets. But first, Nick, how are you doing today?
I'm doing very well, my friend. How are you?
Doing excellent. A lot to talk about here, and I want to start with kind of the theme of the day. We are right at the front of another earnings season. And we talked a little bit about this in our mid-year update with you, but I want to go a little bit deeper on what you're seeing from the earnings profile of U.S. corporations right now, what it looks like for the rest of this year, and maybe a little bit on 2025. And then the big question of, Mag 7 or big tech versus everything else, how that's playing out as well. So any thoughts you have, I'd love to hear.
Yeah, I think I haven't been anticipating an earnings season just to get some relief from politics more than I have this one. But you're spot on. We're right at the cusp of it. Mercifully, corporate profits have held in there, and as we've discussed in the past, we've seen a modest broadening of the strength away from just the Mag 7, which has really dominated the story over the last couple of years. We would expect non-Mag 7 and Mag 7 alike earnings to, maybe settle out here as we move through the belly of the year, maybe through the third quarter. But if we talk numbers, healthcare is actually the sector that is expected to have the strongest top line growth in the second quarter, and indeed is right up there on the podium for the rest of the year. Technology also expected to have a very strong top line, although it's closer to 1%, which is a number lower than I think a lot of investors would guess. And in the aggregate, technology earnings are expected to be up closer to 3% in terms of the overall contribution to S&P 500 profits. The thing to look for as we move through the next few weeks is, does tech live up to its expectations? Let's extend that idea across to communications, where you've got some other big Mag 7 constituents, and of course into the consumer segment as well, when you consider Amazon and its contribution to the overall economic picture. I'd say if there was one sort of side story that's going to catch investors off guard, only because they probably aren't paying as granular attention to it, it's that the financials may, when you put it all together, look as though they're having a disappointing earnings season. And that really is the function of mark-to-marking the Berkshire Hathaway portfolio. Obviously, they have a wide and varied stock portfolio. That's got to be marked every quarter, and will probably take a little bit of a knee this time around. But on balance, earnings remain very healthy, I think setting us up for a continuance of this bullish phase in equities.
Yeah, and we're talking about Mag 7 versus non-Mag 7 earnings, the fundamental profile of those big tech companies. But that informs, asset allocation decisions, and growth versus value almost has become at this point Mag 7 versus non-Mag 7, it seems. In your all's portfolios, and when you think about asset allocation, how are you positioning the growth versus value debate right now?
Yeah, I think you hit it spot on. I mean, there's been so much made of Mag 7 names concentration in the overall S&P 500. Just consider if you remove, all the value names from that equation, those weights become even more dominant. And it has, in fact, fueled, a pretty sharp move of flows, both capital and investment flows, towards the growth side of the ledger. So on balance, we've been neutral to overweight growth. You'd say, why not, completely overweight? Because there are some other constituents that haven't had the earnings follow through. As that comes into play, that would probably inform, sort of a larger allocation to growth. So that's generally where I think portfolios want to be allocated. The one thing you want to watch for, as we think about the Fed and the ECB and rate policy over coming months, is does the economy follow through? And if the economy, for whatever reason, starts to show some weakness, those value names may pick up the pace a little bit and level out some of the runaway price performance from growth. But in the time being, growth is really the story. It's been led, obviously, by the Mag 7 names and the AI theme in particular.
Yeah, and let's go there to end. Obviously, a lot of enthusiasm for AI driving, both the equity performance, the valuations, but also the fundamentals to an extent. How are you all thinking about AI as a theme? To plug the mid-year outlook video again, talked about it briefly, but let's go a little deeper on how you all think about AI at this point in the cycle.
Yeah, I think it's really important that investors think very deeply about artificial intelligence as an investment theme. Clearly, the story over the last year and a half, last 2 years has been focused on sort of the generative AI applications that are increasingly ubiquitous in our lives and in the software that we consume. Number one, and number two, it's really as we discussed earlier, been a little bit of a bulking up story, right? Whether it be power or chips. But ultimately, the business use case has to extend, or the benefits of artificial intelligence have to extend into the realm of productivity. So corporations are going to have to figure, hey, why should I be putting millions, hundreds of millions, or billions of dollars into this? How is it going to help me expand my operating franchise? I think that business use case is very much in its early days, number one. And then number two, there was a very interesting institutional investor survey out in the last couple of weeks that basically suggested that the Mag 7 trade was the most stretched in the market, but the artificial intelligence actually ranked very, very low as a point of concern, as a tail risk for the market. So there seems to be some widening of the gap. The way we think about it, it's all about the industrial power renaissance. Our consumption of power is going up. We clearly continue to see a lot of CapEx flows into the procurement of computational power. So that's the chip component. And we are starting to see some pretty decent revenues into the consulting and other areas of the economy that are really helping businesses understand what AI can do for you. But AI is going to go through a lot of different phases. We're probably in the very early innings of what will likely be a secular theme for investors to consider.
Absolutely. Well, Nick, thanks so much for the time today, the insights as always. We'll hope to talk again soon.
Looking forward to it, Ross. Be well.